Good morning. It's the old one. Yes, Andre. I thought so. Righty ho. You can all see my screens. Yes, somebody tell me you can see my screen.
Yes, Mark.
Yes, morning, Ashley. Thank you very much. Okay, I was talking to young Phil. Well, keep calling him young Phil and young Ashley. They're both late 20s now, but once you become a dad and then a granddad, everybody's young. I was talking to young Phil yesterday, and he said, found it really slow lately. Is it me? And I said, no, it's not you. It's this Ewan from London. It's not you. It's the time of year, and it's the same every year. We were spoiled a couple of years ago. I can't remember if it was last year or the year before. It was actually a very lively August, and we were very profitable. But that was a rarity. And I think that was probably COVID related as well. There was nowhere else to go, so everybody went to work or was trading. But the first rule of anything to do with investing, trading, work even, is that if you know that it's going to be slow, don't go looking for trouble. And I just been on holiday for a few weeks, and then I had a month before that wandering around Europe as well. And equally, come Christmas time, we always say, come Christmas time, don't do it, because the market participants are missing. There's usually very little movement. And it's annoying for many of you because you know it's times of the year when you've got some free time and you want to trade, and now you can't. And on the subject of wanting to trade, I was talking to a new member at the weekend, and he's thinking of going down to a 3-day week. So he's works for the government in the UK, and he's kind of semi-planning for his retirement now, and he's thinking of going down 3-day week and 2 days trading. And I said to him, what do you envisage doing on those 2 days that you are trading? And for many people, the dream is that they want to trade for a living, and that means that they will sit through a couple of hours London Open or New York Open, make a grand, and then go play golf for the rest of the day. And it doesn't work that way. And you have to think about the best use of your time. And this is why I always say to people, you want to have multiple streams of income. Don't just rely on one thing. But the other thing that you can do, and the advantage with what I do, particularly with the longer time frames, is, and the M2, I use the M2 for stocks and I use it for crypto as well. Now, what we're getting at the moment is long periods of nothing happening, and then we're getting craziness. And we always get craziness with news, but it's worse at the moment when it's as quiet. I mean, look at this. This is the euro. The euro today has done 33 pips total range. Yesterday, it did 28, which is a third of what is normal. And the pound was even more noticeable yesterday. So there's not a right lot happening. But then when the news event comes along, it goes crazy, which is why we always tell you not to trade the news and to be aware. This was the Powell Jackson Hole speech on Friday. And I think I made a short video about this or mentioned it in my Sunday post. Everything drifted. This was from the morning. This is 108. I was in this last week prior to Jackson Hole. I think a lot of you got out because of the news, thankfully did. Yes, it shot up 30 odd pips, but then it shot back down again. So it went up 36, down 36, and basically ended up back where it started the day. By the end of the day, we were back where it's all started. So for this week with NFP and very thin markets, the probability of this is greater than ever. And therefore, you don't want to be going looking for trouble trying to trade NFP. What it does mean is, in terms of news, as ever, you're going to have to tiptoe around it. Or what you need to think about is using your skill set. Well, use some of the time. If you suddenly got 2 days a week that you were able to focus on trading, is do some research, understand more about fundamentals. We teach you that inside the website. There's loads of previous recordings that we've done explaining what we do and how we do it. For me, as a forex trader, I am technically 70%, 60-70% of my trading is analysis technically, and then there's 30 to 40% of that is fundamentals to support my technical thing. For example, my bias at the moment is to short the Australian dollar. The reason being iron ore is down. Iron ore is 36%, I think 38% of Australia's exports. The price is down. China now looks as though it could be going into recession. Certainly their construction industry and housing is in a recession already. China told their steel producers to reduce production this year. So hey ho, big clue, as Australia's 38% of its exports is iron ore, and China is its biggest customer, it's a no-brainer. The probability, the likelihood of the Aussie dropping is greater than the probability of it shooting up. So if I see a technical setup to short the Aussie dollar at the moment, I have the fundamental bias to support my theory. However, there will be times of the year as well when it's difficult. I haven't said that before we go on to that. Let's have a look quickly at the news. So this week for news, yesterday, Ms. Bullock spoke, the new governor of the RBA. It was all about climate change and general stuff. So there wasn't anything particular she spoke about. Overnight, Australian retail sales were better than expected. So minor blip possibly for the Aussie dollar. I think Bullock spoke. Yeah, Bullock spoke this morning. I was reading part of the speech before I fell asleep. And then today you've got some big US news. So to do with housing and consumer confidence and jobs openings. So 2 to 3 o'clock, this is a period of time not to be opening new trades. Wait for it to come out, let the dust settle like this. And if you have a bias to take a trade, then take the trade. Don't be getting involved here. Because even though you may have thought, well, it shot up and I could have made some profit, well, equally, the spreads widened. You were probably being taken out and it was going up and down like nobody's business. This is a 30-minute chart. So basically, we want to avoid that at all costs. Tomorrow you've got CPI for Australia, so yeah, could be influential. The preliminary CPIs, all the CPIs have been really bad for the Eurozone of late. ADP for America tomorrow. So once again, if you're going to take the US dollar or anything dollar related today, wait till this lot comes out, then think about taking the trade. And then before ADP comes out tomorrow, you need to, hopefully you're in profit, move the stop at least to entry to protect it, plus 2 or 3. And or take some of the profit off. And even if you're in a loss situation, try to reduce the loss. Either get out or move the stop closer. Well, yeah, if you have a stop that's 60, 70 pips away, move it to 20, 30 pips away if you can, so that at least you reduce the risk. It's all about reducing risk. Then we have generally, shouldn't be too much coming up then for the US. Eurozone tomorrow, on Thursday rather, non-manufacturing PMI. Say all the data out of the Eurozone lately has been very poor. And then you've got Lagarde, the idiot, saying on last week is that she knows that inflation figures will be different by Christmas. Didn't say up or down, but she knows it'll be different. USD unemployment claims, and then of course this is the big one, and I've explained this so many times before, but the issue is that when NFP comes out, the Canadian jobs figures come out also at the same time. But what you can end up with this figure is better than expected, but the unemployment rate's gone up because of the quirks in how they calculate it. But also you can have it where often yes, there are a lot of jobs, but they may be part-time, which means the average hourly earnings is down. I mean, another little quirk with the American jobs figures, if one person has 3 jobs because they need to get extra part-time work because they can't afford to live, those extra 2 jobs go down as 3 jobs, not one person, 3 jobs. So this is why sometimes as well you will see that when the initial news comes out, we get the price races up. But then by the time the analysts have got to page 20 of the research notes, they suddenly find that most of them were part-time jobs, minimum wage or less, etc. So don't go looking for trouble. Having said all of that, Pierre has posted some Earth and Sky this morning, and Ashley will be going through some of those with you as well. Main thing is don't be greedy. I've just shown you the euro is moving less than 40 pips a day. So don't go placing targets of 200 pips away, because the probability is it's not going to get anywhere near. And then a news event will come out and it will come back and take you out. So set realistic goals. And the other thing to be very mindful as well is when news comes out, it will affect all of the currencies sometimes, particularly if it's a dollar. And therefore be very mindful of correlation. This is a correlation map that is inside our website. This feed comes from my FX book. A better one here is the one from Mataf. And on Mataf, you can actually set this to the pairs that you want to look at. Now, it's a bit overwhelming visually to start with, but basically what it's telling you is, for example, if you look at, let's look at an easy one, the dollar yen. The dollar yen is the same, coincidentally, as 91% of the time at the moment is the same as the euro. Who would have thought? So then you've got the scenario, if you're thinking of taking the dollar yen and the euro at the same time, you either need to halve the risk or only take one of them because it's the same bet. And the dollar yen at the moment with the pound, and then inversely with the Aussie CAD, etc., the correlation is massive on the dollar yen at the moment. This is on a daily. If you're trading 4 hour, you need to go down to 4 hour. Sometimes, for example, at the moment where the dollar yen on the pound is, the euro is 91%, which is weird. Sometimes I will go down to smaller time frames and see what's happening. Well, on the smaller time, it's only minus 39. So that tells me something is out of whack here, because all of these are virtually, apart from, I think, the New Zealand dollar, are completely different on the 4 hour. So what you have to do is keep your eye then and see whether these numbers are going up or down as to what's ahead. Now, so going back to the gentleman who's thinking of spending 2 days a week trading forex, what I was explaining to him is that you have to be very careful that you don't end up being a busy fool, and you don't end up sitting there for hour after hour when you're tired and when things are not lining up the way that you want, and you've only got these 2 days to trade in, so you've got to do some trading now. That's when you will screw up, and that's when you will make mistakes, and then you will turn around and kick yourself for doing stupid things. One way, what I said to him was, understand more the way that all markets work together, because you can then use that skill set to make money in other markets. So it could well be that FX is slow this month, but yet on the other hand, you could be making money in crypto or stocks or mining stocks or shorting stocks, etc. So the same skill set, it gives you the opportunity to go into different markets. And that's what I'm going to have a look at today. And I'm just need to grab a quick drink because I've got a very dry throat this morning. Just excuse me. Morning, Tony. Oh, we got a flurry of people came in afterwards. Morning, Farah in Malaysia. Not spoken to you for a while, darling. How are you? Ishak in Singapore. James, not sure. Is that James Thailand, James? And Tony from Birmingham we've got as well. So I would say what I was saying to this chap is don't be sitting there for hours and hours and hours. This is why I started Mentor Pro. I get people who don't know us and they say, if you're so good at trading and making all this money, why did you start Mentor Pro? Well, I started Mentor Pro because I like teaching. I mean, I coached football in Spain for 15 years. I was, in the end, I was a Spanish FA regulated football seller coach in the Spanish second division. At the moment, the Spanish Federation are tearing themselves apart over somebody giving a girl a kiss, which all seems very silly to me. But I was teaching football to kids and to adults, and I was coaching adults at a higher level. So I like teaching, but the main thing for me was that when I was bored, and I was trading full time, 5 days a week, when I was bored, I was dangerous. And I would do stupid things. I would sit there for 4 or 5 hours. I would get very tired. And then I would start to force trades that didn't suit my rules. And then I would beat myself up. And then I would do the same thing the following day. So when I started to teach people, it kind of distracted me, was one of the benefits. I like teaching anyway. And the other side of it is in drilling into people, look, you've got to do this and you've got to do that. It kind of reinforced it for myself is, look, it's all right you telling everybody else to stick to the rules. It's no good if you don't do it yourself. So for me, it was beneficial to do that. So have a think, if you were to quit your job, either by choice or by circumstance, or you're thinking of retiring and you want to do what the chap I was talking about earlier is doing and go down to a few days a week in your current job and ease yourself out. Have a think of other ways that you can make money. Can you monetize your current skill, for example, teaching other people? Can you be a consultant? Can you build whatever it is that you can do. Think about other ways to make money without relying solely on FX. Because let's face it, if this was your main level of income and you need $5,000 a month income, August, you don't make any money. January, December through to mid-January to Martin Luther King, you generally don't make any money. If you've allowed for it, that's great. You go on holiday then. But if you haven't allowed for it, that brings a whole new level of pressure on you. And as anybody in this room will know, if you've ever got into drawdown or you've ever got into debt, trying to get and dig your way out of it takes forever. And it's 10 times harder to go from minus to zero than it is to go from zero forwards. So think about what you can do. Now, if you're going to use, let's take this example again of these 2 days, and you're going to use these 2 days, okay, what should you do? Well, you should try to refine your technical skills. Go back through what you've done in your journal. And if you're not keeping a journal, then start to do one. And again, the gentleman I spoke to the other day, and I spoke to somebody last week before, who'd been with us for donkey's years. There's Hilton with us this morning, who similar thing. After about 8 years, said, after listening to you bang on for so long, I finally started to do what you said, and things have improved. And I found an article yesterday somebody had sent me from, I was interviewed by Daily FX in 2012, and I was banging on about treat trading like a business, keep records, keep a journal, risk rules, etc., etc. So I haven't changed. It's just people's perception perhaps changes when they get to the point and think, well, okay, I give in. It's not working what I'm doing. I better listen to it. So 2020, using the same skill set as I taught you for the last 15 years with FX, I took some of you on a journey with me where we made a shed load of money out of crypto. And this is in the crypto section of the website. This was a recording from October 2020 when I explained why I was getting into Bitcoin. I missed out on Bitcoin in 2015. Omar, some of you will remember Omar. No, I don't know where he's gone. Omar tried to persuade me to start Bitcoin mining, and I didn't understand it. And I didn't get involved and kicked myself afterwards. But anyway, I got in Bitcoin. I bought my first Bitcoin 3 weeks before the COVID crash, and it went from 7,500 to 4. But I started buying again on the way back up. And the reason why I started to buy was because I'd done a lot of research the year before and started finally to understand it. And I explained it all in that webinar. You can go back and have a look in there. I talked about how inflation was likely to come ahead, how you couldn't trust the banks, and thinking about putting your money elsewhere. I also explained why the actual technology is as important, if not more important, than the tokens. So those that joined me at the end of October came on a wild ride. We went from 8 grand ultimately to 67,000. Ethereum, one of our other main tokens, went from 188 to 4,000. And our best client member, she took $100,000 to 1.6 million. And this was all M2. It's not very clear on this chart here, but price made breakouts and pullbacks, breakouts and pullbacks, breakouts and pullback, breakout and pullback. Finally, it did a break short. On the way up, I kept telling folks, take profits. We take profits, we buy on pullbacks. Take profit, buy on pullback. Those that followed my lead banked substantial profits. Then when it dropped, it came, look at the chart, it came back down to 30,000. Was major previous support on the way up, and therefore it was logical if it was going to stop anywhere. And this is what we're doing all the time. This is the thing about probability. It's all probability. If this thing stopped here last time, where's it probably going to stop next time? On the way up, after a pullback, as it started hitting the dizzy heights of what initially I think was 62, 63, where was it going to run out of steam? The logic is that it was probably going to run out of steam there because it's now got too expensive. The ones who bought lower down are panicking and thinking they're going to lose the profit. Becomes a self-fulfilling prophecy. It tanked again. What did it do? It then broke, I seem to remember, it broke a neckline on a Head and Shoulders. It stopped again at 30 for a few months. Then it dropped lower and it bounced off 20. And of late, it has been bobbling around 30. And this last 2-3 weeks back down at 26,000. But this was easy. This was falling off a log, making money hand over fist. And I've told the tale before. I had a guy from a hedge fund call me trying to persuade me to get me to send my clients who I'd used to trade for privately, to send them to him. And they were making 4 or 5% a year. And on the day that I spoke with him, I showed him our spreadsheet, and I think we were 800% up in about 4 months. So we didn't go any further with that one. But this was easy. Now it's more complicated, but I do think that there is the potential with crypto still to make money, and it will have its day again. One of the things as well, my daughter is not, she doesn't want to get involved in crypto itself because she thinks it's too complicated with the storage. And it's messy and it's fiddly. And they really need to improve the in and out of crypto. And the government in America, particularly at the moment, is trying to kill it. Her Ginsler is really trying to do his damnedest to at least stall it as long as possible so they can get a central bank digital currency out. So for anybody that's not wanting to buy physical crypto, or the banks won't let them. In the UK, NatWest will not let you to protect you. You can buy anything else of NatWest products or invest anything else anywhere else, but you cannot buy crypto through your bank account because you're not allowed, because you're not grown up enough. So what you can do is buy stocks. Now, this is not a recommendation. I am not a licensed financial advisor, but I have done some research on this firm, and I have suggested to her, and what we're going to do is buy some of this. This is called Riot. And Riot, if you want to know more about them, if you go into Yahoo and you scroll down to the bottom, it explains that they are a Bitcoin miner. They actually, the main base, I believe, is in Texas, where they've got cheaper electricity. But this explains what they do. They're not just a Bitcoin miner, but clearly, as with a gold miner, if the price of Bitcoin shoots back up again, they will make substantial money. And then you've got a chance. They don't pay a dividend at the moment, and it could be a very, very wild ride. But I have suggested that to, and I'll show you the chart in a moment. This is a more detailed report. This is an overview going into all the valuations and things. Revenues forecast to grow 37.8% per year. Analysts in good agreement stock price will rise potentially by 92%. Analysts, you can take them or leave them, but I think that this technically has the potential to make a substantial move. They talk here about less than 1 year's cash runway, but they are actually quite cash rich. It's very volatile. This is not something that you want to be watching every day because you could have a heart attack. It has to be cash that you can afford to tuck away and leave possibly for a year or two. But just as with Amazon, and I'm not suggesting this will do as well as Amazon, Amazon in its early days dropped 95%. So when you see all these big companies saying, oh, if you bought Amazon in 1997, you'd be a multimillionaire, you wouldn't, because most of the people would have been out or taken out. But it is a way of trying to get involved in Bitcoin. They don't pay a dividend at the moment. It's saying it's currently unprofitable, not forecast to be, which again is a lot like conventional mining, as in gold, etc. And they've diluted shareholders, which you never like. But this then goes through their debt situation, for example, and they haven't got a right lot of debt at all. And it appears to be very well run, and it is in an interesting sector. So for me, I have recommended to my daughter, not to you, you need to do your own research, but I think that it's a way of being exposed to Bitcoin without actually physically owning Bitcoin and the inherent hassle of saving it and storing it and things. This is a website which explains a bit more about what they do, and this was their most recent report. So an interesting one if you are interested in crypto. Buffett has now sitting on a pile of, he's just cashed another $8 billion worth of stocks this year, I think second quarter. So I think he's sat on $140 billion now. Michael Burry, who famously made a fortune in shorting the market in 2008, has done so again. So the clues are there, building and building, that we're going to see a big drop. I have been expecting a big drop all year, and it hasn't happened yet. And I have missed out on some real good moves, particularly in the FANG stocks, because I just didn't believe it. And therefore, okay, I missed out. I've done reasonably well on stocks this year, but I am building and have been building positions in gold and mining stocks as well as. Any questions so far? Hi, James. Well, again, I'll have a quick sip of my tea. Any questions on crypto or stocks or anything else? If you've got any, stick them in the chat box. So we saw the other week. So this is the point now that I keep banging on about, that you need to realize. Last week, when we got the move from Jackson Hole and the dollar shot up, then gold dropped, gold mining stocks dropped, because that's the way that the markets work. That money will flow to where it sees the biggest value or the biggest return. Now, it only lasted a few hours and then it all started to go back again. But the dollar index has made a significant break, and it has broken a trend line. I think I have the trend line here. It has broken the EMAs, and you will notice as I rattle through this lot now, the price is generally bounces back off EMA. So I use EMAs as targets a lot of the time. So for example, the dollar index, when it came down here, when it dropped, came back. Oh, okay, the 200 EMA has moved now, but into the area of the 200 EMA. When it sets off again, I anticipate it will struggle at previous level support resistance and the 55, which it did for a while. Then I anticipate 200. At the 200, I would have taken at least 80% profit off here, because you are looking at the trend line, the EMAs, and all the rest of it. So I wouldn't even be in this now, and I don't trade it. Oil has broken. These are weekly lines. You have to put them in manually on TradingView. But oil is currently above the 55 EMA. 55 could be crossing the 200 soon on the daily, which is a bullish signal. Where did it run out of steam this time? Well, in an area of major previous support resistance, didn't quite get there. Gold, on the other hand, on the last move on gold, and this was the previous move on gold. Let's have a look. Let's take this one out of the way for a second. So if you recall, prior to Christmas, I'd had to sell my gold because of the tax, and then it set off without me, and I sold in here around 1900, and it went off to 2000 almost, and I kept saying, look, I am waiting for 1820, which I got, and it actually came down to 1802, and this was a perfect example of M2. It was 78.6 fib, 200 EMA in an uptrend. We had a trend line in place as well. And fundamentally, as much, if not more, my thinking was if the stock market is going to drop, the ultimate safe haven is gold. And therefore, I was confident to buy there. Now, with the recent move back down, what I said to you the other week was, again, M2, fib. Oh, bugger. Pardon my French. So gold this time, I was explaining, I was looking at 1900 to buy more. We had the weekly 55 EMA. You've got the 78.6 fib below. Last time it shot up, where was it probably going to run out of steam? Quite clearly, quite obviously, was here. And if it sets off again and it can break this 55, where's it probably going to at least struggle will be here. And to get through here, it is going to need some extraordinary event. And God forbid the war in Ukraine spills over and becomes a world event, or if the American stock market was to tank, it needs something extraordinary to get through here. Because once again, at this level, buyers are not interested. It's too expensive. And the ones who bought down here are thinking, well, if I don't take my profit soon, it's going to drop and I'm going to lose out on my profit. So therefore it will drop. And all the time, what I'm looking for with mining stocks, with any kind of stocks, I am looking for pullbacks and probability, aka M2. If this thing drops, where's it probably going to stop for multiple reasons? I also explained, I think about a month ago before I went on holiday, I have orders in as well, and I can't remember the exact figures. I think 1850, 1800, and especially down here around 1780. And I am buying to accumulate. And what I do with gold, I don't sell it, I hedge it. And sometimes I just ride it. This is gold on against the pound. I explained previously, you have to think about gold vis-a-vis your own currency. And I explained I had bought some gold here at £1,500 with some spare pounds I had. When it set off and did its run, where did it stop, run out of steam? 200 EMA, 55 EMA. This is a bearish signal, so it could be that gold is going to go on a bigger run down. It needs to break through 200 at the minute to be confident it's going to get back up here. This is the example I've shown you before. This is the gold against the Turkish lira. Inflation in Turkey is running at 70%. Had you converted your Turkish lira into gold, you would have offset the inflation at the very least, because it would be 90% up. And that is why people use gold as the ultimate hedge. And silver, I have more silver than gold, because the silver previously was up at $50. So it has the potential to at least double to the previous high. And also there is a physical demand for silver, particularly with global warming. People, for example, silver goes into the solar panels as well as computers and lots of other things. So silver is needed in industry. And again, the first time I was buying at 22.50. This time I said I bought at 23. I also bought some at 22.50 again the other day. And I have orders in for silver rather at 22.10. 21.40, I think, and definitely down here. The other thing I'm doing with all of this is I also have in a COVID low, and now I'm saying that I haven't got it for silver. Oh, yeah. I also have the COVID low in on a lot of stocks. So if we do see a crash, where's things likely to run out of steam? I am thinking about the COVID low. Now, Bitcoin is risky at the moment, always risky. The 55 is trying to cross 200, but we're trapped at the moment between the weekly 55 and the weekly 200. If it breaks here, it could go on a big run. If it goes on a big run, I would buy some more. Riot, I showed you earlier. This is Riot, and this is the Bitcoin miner. This was a move a few months ago. They got some better than expected results, and it shot up. And again, this was one of those, when it shot up, leave it. Do not go chasing this. This went up 80-odd%. Well, once it's got up to there, I was waiting for a pullback, and I was starting to be interested. I had an alarm set first at 61.8 because I got the weekly 200, and then I had it set here at 11.50. And I said to my daughter on Friday, we need to buy some now. Now, the other thing, what I do not use stops in stocks. I hedge. I don't hedge in FX. I've never been able to get it to work in FX, but I do hedge in stocks, particularly gold and for miners. So what we're going to do with my daughter, she's going to put, let's say for math's sake, she's going to put in $1,000. So she's going to put in 250 now, 250 at 850, 860, 250 at 475, and then the other one, I think, should be at 320. So what we're trying to do is to scale in, because this does look bearish at the moment, and Bitcoin particularly, say if this crosses, there's a lot of fresh air down here. This could be a big move. Now, if we miss this and it sets off up again, then we would look for the pullback to add to positions. But I don't want her to go in. She's not got the stomach for it like I have. I don't want her to go in full now in case this thing drops all the way down here, and then I'll never hear the end of it. Again, decide on your risk tolerance. Rudolph says about the Aussie yen. Yeah, I'll have a look at that in a little while. So Ethereum, another one, sat on the 200 EMA. So when it dropped, where is it most likely to stop? Well, the 200 EMA on a weekly the first time. We're there again now, and it's consolidating. Again, if it drops, I would be interested to buy. Last time I bought this was back down at 1,000, you will recall. The gentleman who keeps questioning my if things I say are true, go back through the blog. I am not going to do it again, but you will find in a previous recording around June of 22, I explained I would be buying at 1,000. I also had an order in at 850, which just missed. Ethereum is silver to gold on the crypto world. Now, the other one is Litecoin at the minute. Litecoin, according to Gary Ginsler, is, he said in a video, where's it gone now? say Gary Ginsler has been put in by Biden and mob to stop crypto, and they're trying desperately to do as much as they can, changing the definition and lots of other things so that they can ban it, or at the very least put people off it so they can get a central bank digital currency going. But here in a video in I think it was recorded in 2018, he actually explained that Litecoin, Bitcoin Cash, and Ethereum were not securities. And Litecoin last month had its best turnover figure. There were more transactions on Litecoin than there were on Bitcoin, and it's dropped. So for me, being a bit more adventurous, I would be willing to buy now. And whenever I'm buying crypto, I am looking for a minimum 35% potential gain. But this has got the potential to go 75% to where it was 2 months ago. And its previous all-time high was up here at $300. I think actually it went higher. Yep, it went higher. We were in this one as well. It was up at $400. So it's not a security. So Gensler cannot now come back and say to people that it is, because it's on video. And even though he wasn't head of the SEC at the time, he said it was not a security. He can't go for it. It is being used, and therefore it's very interesting. Those who are more risk averse than me, then consider, again, not financial advice. You make your own decision, do your own research. I have an alarm set at 52.50 because it was major previous support and resistance. And if it got down near 30, I would be all over it like a rash, because this was the COVID low. And I say I have done this with lots of stocks. So I need to get onto forex now, because I'm going to run out of time otherwise and leave Ashley with no time. XRP, I do have occasionally, when I've got any spare cash, I do buy a bit of this. They're currently in litigation with the SEC. They got a partially favorable result recently. This was this crazy move. I explained this at the time as well. This was an overreaction, that the news was not that they'd actually won, they'd part won. And the SEC have still contesting it. But I did buy some in around 50 recently. But this is a punt. If they lost to the SEC, or the SEC drag it out another year, which is quite possible, it could go lower, and then I would buy. Rig, James from Thailand, is with us this morning. He and I bought this last year around $3. James used to work for this company, so knew quite a bit about what was going on. This is part of the oil supply chain. They supply the rigs to the oil companies, and when an oil rig, when the oil market collapses, the oil rigs, to shut down an oil rig, James was telling me, can cost tens of millions of dollars. So it's better for companies like Rig to actually have contracts with the oil companies to just run it at bare minimum to keep it ticking over. And that's the scenario that was happening with Rig. They've suddenly got a load of new contracts, and now they've gone from, one of the rigs we were talking about, I think it's gone from $200,000 a day to $500,000. So they're suddenly very profitable. However, one of their directors the other day was taking profits, and I think it was the CEO, and he was taking quite a lot of profits. So I talked to James about this. I took a chunk off at 760. I'd previously taken some off and bought. All of these were sells and then buybacks, sells, buybacks, sells. I was watching this the other day, but I'm not going to take it now. What I will do with this, if it pulls down, so you've got to watch oil, obviously, but if it pulls back down anywhere between 650, I would buy some more, and I would definitely buy some more at 560, all being equal. Occidental, I am in this. I bought on the break, took some profit somewhere in here. My daughter the other day bought some in here, as per my suggestion. Schlumberger, I have made money on this before, but the chief accounting officer recently sold $1 million worth the other week in here, so I got out. Again, I'm interested to buy lower down. Right. Rudolph's asking about the Aussie yen. Let's do that on MetaTrader. So dollar index, as we know, has broken. It broke the 78.6 fib. We're now technically in an uptrend. What I said on Sunday is just don't be in a rush to go long the dollar, because it's quite possible, particularly in current markets, that it doesn't go anywhere. This yesterday went 19 pips. Today it's done 27. The average is 60. So that proved the point. Similarly for oil, oil tried to break the triangle. and it's this current candle is now breaking. If this can break up here, this is quite a substantial triangle. This could mean that oil is on its way to $90 a barrel. And I was saying before, once it can clear here, we could be back on for 100 quite easily. Gold, I've just shown you, I've gone through that in detail. Now, gold, I do have it now in a down channel. So those who want to be thinking more conservatively, 1800 again starts to look very interesting for a potential bounce back up. Or traditional way is you wait for a break and close here and go long. I don't do that. I always look for pullbacks. Silver, triangle again, and I've shown you the levels on there. We've been through Bitcoin, been through Ethereum. Right. USD Swissy, I showed you on Sunday. Yes, it tried to break the down channel weekly, but it failed at the end to close. And it is doing this again. And I was in the Euro short long last week, and I talked to James from Thailand because he was thinking of taking it at the time. And I was saying, well, what's good is that the USD Swissy was struggling at this resistance. The dollar index was struggling at resistance. And then the Euro had come back down to this major area of support. So I did get in short term on this one. And what I was saying on Sunday, I mean, this needs to do something. This is in the big make your mind up area. So once again, don't go looking for trouble, guys, because it could go up, it could go down. It's a 50-50. You have no edge. What would be really interesting, if this breaks and closes down below here, pulls back in here, that would be great. And if it makes a move up and pulls back into here, that would be okay. And again, with the Swissy, breaks and closes here, we start to think, well, it's going to go back up to 90, previous maybe just support resistance, and possibly up to the 200. Euros just shown you. Pound looked a bit more interesting this week. I have got an order in on the pound at the moment. The reason being is it's a similar setup to the euro, but it's not hit the zone yet. And if this was to come in here today to my entry point, that would be 125 pips. The average is normally 100, and yesterday was 45. But if it came into here, I have got, remember, aim for 4 or 5 minimum for the multiple reasons to support the theory. If this thing drops, where's it probably going to react? And I have got a daily trend line. I have the daily 200 EMA, the weekly 55 EMA, 78.6 fib, whole number, all in the same area in an uptrend. It is a no-brainer for me. I would take this every time. I have the stop below the 55, so I am risking 50 for a potential 1 to 5 risk reward, and I would at that point take some profit and leave the balance to run. 1 to 5 risk reward is what we're looking for. Perfect setup. And there was some inflation news came out for the UK today as well, that the inflation, retail inflation, which has been the biggest problem, food, is actually down. And I think it was down from 8 to 6.9. So it's quite a significant drop on food. So if we're going to, that would be positive for the pound, hence the move up this morning, now pull back. That is an A grade for me. Equally, the euro pound is an A grade for me. I have split this into two, working with a client this morning. We looked at this. So I put part of the order here, thinking that because we've got an intersection of a trend line, 78.6 fib, and the 55 just above. Now, we've put the stop in the same place for both. The more aggressive stop will be here. But the thinking here is it might not get to the preferred area here. So the idea is put half here and half there. This one has got a 50 pip stop, and the other one has got a 25 pip stop, and it's got the potential to do 1 to 3, 1 to 4 risk reward. So again, that is an A grade, but you'd have to watch the correlation before somebody says it. Now, if you look here today, to get up here is going to be 66 pips. The average is 44. So it might take a day or two or some news to get up there, but that is an A grade for me. New Zealand CAD would be an A up there. AUD, just explained about fundamental and technical. I showed you on Sunday, area of interest if you trade in shorter time frames, A grade would be higher up. Same for the New Zealand dollar. I mean, the 55 now is running down the line. I don't normally put the line here when we've had a break, but that's really quite interesting, New Zealand dollar. More interesting than the Aussie at the moment at 62. So here at 62, you've also got 61.8 fib. Area of interest here for intraday, area up there. Now, Rudolph was asking me to look at the Aussie yen. Dollar yen, I was showing you on Sunday, the logic is that if the dollar yen is going to run out of steam anywhere, it's up here in between 148 and 152 where it went to last time, because here is where the Bank of Japan intervened. They don't want the currency getting any weaker. So if you're in this and you've got part of your trade left and you want to know where to get out, that is the ultimate area I would definitely take my profit. And also, the nearer it gets, I would not take a new trade because the potential for it is not great. And I wouldn't take the dollar yen at the minute because really, I don't have multiple reasons. I don't pay attention to 38.2 fib, not massive previous support and resistance. I've only got the 55. But some of the cross ones, I've got a forward ordering on the CAD as well down here. Aussie dollar yen, Rudolph was asking about. Yes, I have got one in on a daily, Rudolph. Reason being, I've just shown you on the dollar yen why I'm not keen, but on the Aussie yen here, I've got multiple reasons for the stop. So I've got the whole number, I've got the 55 EMA daily, 55 monthly, weekly monthly 200, and the 50% fib in an uptrend on a breakout with a pullback. So here I'm risking 50 for a potential 550 gain, 1 to 10, 1 to 11. Think on, start at the beginning of all this. It's a slow month generally, but one trade, if that fires, could give you a month's worth of profit. And this is all where it comes down to: patience, discipline. Wait for price to come to your trap. Look for multiple reasons to support the theory. Look for 4 or 5. I suggest to you folks, 5 reasons. Make a checklist. Tick off on the checklist. What have we got in this area? So this is the pound Aussie. Ashley's one of Ashley's favorites. I don't like it, but we've got previous major support and resistance, the 55 EMA coming up behind it, a trend line, daily trend line, keeps moving. And then you've got the whole number just above. So there's a lot going on here. If it broke and closed below, then you start to think of a short. So that is what you're looking at all the time. Remember correlation. A lot of these pairs are similar patterns, so you'd have to decide which ones to take, which ones to leave, and you have to keep watching the news. Right, I've given Ashley 13 minutes now. So I've got plenty of time, Ashley, today. See if I missed any questions. No, I haven't missed any, I don't think. Anybody has any more questions, stick them in the chat box whilst we get Ashley and share screens with him. I need to stop sharing.
Thank you, Mark. I'll just share my screen. All right, can everyone see MetaTrader?
Yep.
Okay, cool. First one I want to show is an M2 trade, actually. So I was looking at this on the 4-hour, and I was actually in this here. I caught it last week to the pip at this 200 there. I was looking for a short. It didn't get anywhere. So what I did is I just closed it because it was Friday as well. Now I'm looking at it again, and over here it's a bit messy, but I've marked up this area here, just like last week when I took the trade here. So I won't take the short unless it breaks out below here like this, closes below, then I'll look for the pullback and take the short. Don't need a big stop here, possibly around 20 pips for a stop. If you're going conservative, 30, or otherwise you could put it above this region of resistance, which is around 20 pips again. 50 pips in here, but my official target would be where it was originally, which is down here for 150. And very likely the euro is quite weak against the pound. So you saw the numbers last week, the manufacturing figures are quite bad. So this could go all the way to 83, I presume. So around 200 pips in there for a nice move. Pound Aussie, the one Mark showed. So I have it in the same area, but I was just going to show that I have a monthly 200 in there as well, along with the 55. So my EMA is slightly different to Mark's. Right. So Earth and Sky, we have only a few pairs. Some of them are ones I wouldn't take, but I'll tell you why. So on Aussie New Zealand, I just don't like this pair generally, but It's come up on the Athens sky, and we have a zone here at 108,330 and 108,120. Anyway, around here for a long is okay. Don't need a big stop, which is nice. And you are targeting basically these points here. So possibly around maybe 90 pips, and you can take some partial profits off here. The pair doesn't really move much. So you can see your average is 60 pips. Morely moved around 30 today, but yeah, it's generally a slow pair, but reacts to the news quite widely. So tomorrow you have the CPI. So wouldn't be a good idea to take a trade anyway here. You'll need to see what happens, but if it drops, maybe that could be interesting in here for the long. But yeah, not a A grade for me yet. USD CAD on the M2, I have the same region as Mark for the long, but on Athens Sky, because it is in an uptrend, it meets the rules. We're looking for a long anywhere in here at 135,680. And your stop, you can put it below here, below the weekly support, or just under that 61.8. And you're looking first target here, 96 for 30 pips. So 1 to 3 there, and possibly also in here, you could look to hold it. In terms of profit target, I would say, yeah, 130, yeah, it's coming to a point of resistance here, so you'll need to keep an eye on it there. So max, I would say, is not much risk reward if I look on the M2, but on the Earth and Sky, it does show a level here if you're taking it up here. USD yen, now this one does meet the rules, but as Mark was saying, you're buying up too high. So it is a little risky. If the Bank of Japan intervenes in here, then it could just drop. I was looking at it on the M2, and you basically kind of have a little trend line broken there. And then it has made some support. So it kind of lines up with the USD yen on the Earth and Sky. So you could put your stop below here, 37, same kind of idea with the thing, and then take it back up. But again, I think it's just too risky to take it up here because you can see that it's kind of losing the steam. It's not going anywhere, so anything can happen. It could go either up or down, and yeah, it's a very risky trade. But in here, you're looking for a long at 145, anywhere in here with the weekly pivot. So you could put your stop here and then take it back up. But again, not a great idea to do it when it's that high up. CAD yen. So this one does apparently meet the rules when Pia did it, but it's changed. And I'm not too keen on this one because this high here is not bigger than this one. Usually I like it when it trends, and it's clearly not trending upwards for me to long it. So I'm just going to ignore this one because it doesn't meet the rules either. It hasn't done at least 50 pips. Same for the euro. He mentioned it in his post. It has been changing the colors, but it is still in a downtrend. So he's saying it still applies. And you're looking around here, 108, 450 for a short, and the stop would probably be around here. But again, you wouldn't take it because, as you know, there's a trend line right in there. So the chances are it could bounce off back up. So again, I wouldn't take that one. I have a short in here, which is basically there where the 55 is. And if you go on the 4-hour, it's quite nice because you have the 200 rolling in there, 55 in there. So it's been previous resistance there, reacted and gone down. So over there, I would take it for 124 pips for the target, but not really for a short in there. And I was just looking at the Aussie yen because someone mentioned it in the chat. Or to look at it on the 4 hour. So on the 4 hour, yes, it does meet the rules on the Earth and Sky. So you're looking to long it here, but the problem is you have a lot of moving averages in there. So 55 on the 4 hour there, 55 daily, and then 200 4 hours. So you're basically trading into the face of it. And you can see there, price has been raging quite a lot. So personally, I wouldn't take it. Also, the Aussie is quite weak. And it doesn't really line up with the fundamentals. Also, the yen is quite weak as well. But I would put my bet a little lower, like I have over here, like Mark, 78.6 with a lot of other reasons to take the long there. All right, I think that's it for me. All over to you, Mark.
Yep. I agree with the Aussie New Zealand. I just don't bother with it anymore. It has a tendency when big news comes out just to go through. It just cuts straight through everything, and then it goes to sleep. So I got really fed up with it. I actually don't mind the look of that dollar yen on the 4 hour, because the thing is, yes, it's high up, but we're not at the highs yet. I mean, the area I'm thinking is more like 148, 49. So. And the thing I like about it, I always like it when the weekly pivot is above the zone. So I wouldn't discount that one. Because
Also, it's broken
if
this.
if it pops, it could quite easily go to 149. So I wouldn't discount that one. But yeah, from the Aussie and New Zealand, I agree. And Aussie yen not as clear, but no, I didn't think the dollar yen looked that bad, and I hadn't looked at that. You're welcome, Clive. Oh, sorry, Clive, I didn't see you'd sneaked in. Were you late? You're welcome as well. Thank you to Ashley in the UK. I was there for a few weeks. The weather was nice. Well, it was nice because it wasn't too hot. Back in Portugal now where it's flipping boiling. We will be with you again next week. I think it's us again next week, or I'm not sure if Tianis is going to be here. You're welcome, Tony. As I said to you, beginning of it all, it's a slow time of year. Don't force trades. If you've got time on your hands, study other markets and have a good dig around. I showed you some suggestions for stocks, and I showed you some suggestions on my ideas to think about, not financial advice, read Bitcoin and Litecoin, etc. as well. So research, expand your knowledge, think about other ways that you could make money. If you want to trade for a living, you don't want to be doing it all day, every day. I don't do many hours at all doing this anymore. I prefer to work from weekly, as you know. So, I mean, I would be completely bored if I didn't have anything else to do during the day. So think about multiple income streams. Think about other markets using the same skills that you're learning with us. And it's the same disciplines, rules, and structure. We have a competition coming up in a week or two's time as well. And I'm going to let you know a little bit more about that. It will be we will be asking everybody to comment in the forum, because there's so few people actually go to the trouble of commenting, and we know there's lots of people are going in there looking but not taking part. So those who take part have more chance of winning. There's some decent prizes. Well, more about that later in the week or early next week. Thanks, Ashley. Thank you one and all for attending. Enjoy the rest of your day, and we will see you next time. Bye-bye. You're welcome, Daz.